Hello and welcome to this Leadership Series discussion on payments, brought to you by The Banker magazine from Brussels in Belgium. My name's Michael Imson, I'm a contributing editor of The Banker magazine, and I'm joined here today by an expert panel from Clear2Pay, the payment solutions provider for banks. And we're also joined by two more experts from Tower Group and iTay. Our panellists are now going to introduce themselves.
My name is Michel Akkermans. I'm Chairman and Chief Executive Officer of Clear2Pay.
Hello, my name is Gareth Lodge. I'm Research Director for Payments for Tower Group.
Hello, I'm Mark Hartley. I'm Vice President of Strategy and Marketing for Clear2Pay.
Hello, I'm Matt Ellis, General Manager of Clear2Pay Americas.
Hello, my name is Doug Gross. I'm Vice President of Sales and Marketing for Clear2Pay Americas.
Hello, I'm Nancy Atkinson. I'm Senior Analyst in Wholesale Banking for iTay Group.
Well, today we're going to split the discussion into 5 topics. We're going to talk about the latest trends in payments globally. We're going to look at buy, build, assemble or outsource, the big question there. We're going to look at some US issues. We're also going to look at mobile banking and payments, and we're going to look at the banking for the unbanked and underbanked, with a special focus on international remittances. So Michel, let's start with the latest trend in payments. There's a lot happening in the world at the moment. We've got a lot of competition, there's more regulation. Customers are demanding more, banks are having to provide the right sort of services to meet those demands. That's quite a lot. What, in your view, though, do you think are the main payments challenges for banks today?
Well, Michael, you've listed quite a lot of them, and banks are being faced with each of those in different ways and different forms. It depends on what kind of region you are in. It depends on what kind of bank you are, and it depends on what kind of service you're trying to provide to your customers. Now, that being said, I think indeed that changing customer demand, I think that changes in regulatory requirements, but also technology changes are very important to financial institutions across the whole globe. Perhaps just focusing on technology, most of the banks are being faced with aging infrastructure. They need to replace that aging infrastructure, and that in itself has a very deep impact on how they're going to conduct their business.
And Gareth, you've done quite a bit of research in this area, payments. What's your view on this? What are the key challenges?
I think building on what Michel said, there's very much challenges around the technology. I guess the credit crunch is something of a catalyst. Payment volumes continue to grow, whatever happened. In Europe, they grew 5%. Last year, regardless, but budgets are not keeping track with that, and so the things they've been putting off for many years are now coming back to bite them. And so I think we'll see in the very near future a point in the road where they have to decide what they're going to do, because I think they're going to have to do something.
There are a lot of challenges, of course, but the rewards are very big for any bank that's in the payments space. The rewards can be huge. What would you say is the business rationale for a bank to have a strong payments offering? Gareth?
I guess if you think about it at its most fundamental, banking is about the movement of money, and the movement of money is about payments. It's the lifeblood of a bank. And so getting that right and making sure it's reliable, secure, the customers, be they corporates or consumers, have that trust in the system is absolutely paramount. It's the foundation that everything else is built upon. And getting that right has to be a priority for the bank going forward.
Yeah, Michel, you're nodding there. So, business rationale for a bank to be in the payment space. What is it?
As Gareth said, it's a very important part of the business of any bank. It's also very interesting to note that during those 2 last years, which were difficult years for the financial industry on its own, the payments business continued to contribute quite importantly to the bottom line of financial institutions. So getting that right, providing the right service to the customers, achieving operational efficiency and compliance with regulatory reporting requirements is extremely important.
And Mark, do you have anything to add on that?
Well, I think the biggest challenge that banks face is clearly around the regulation. I think what we've seen in all parts of the world is an environment that perhaps things haven't been regulated enough, and I think banks will I think the unfortunate thing is a lot of their discretionary spend will be held back because of the spend that they have to get on regulation, and I think that's going to impact all parts of their business, and payments will be part of that business as well.
That's the challenge, but what about the reward for them? What is the business rationale for them to stay in that business?
Well, I think that the reward is if you don't meet the regulation, you don't stay in the business. So, and I think that that's the first hurdle that they've got to get it over. But I think obviously, as both Gareth and Michelle have said, that innovation and trust are things that are very important. But that baseline has to be that they meet the regulatory requirements before they can start to win back the trust and be innovative towards their customers.
Yeah. And Nancy, yes, I wanted to ask you if you had any views on that.
I agree with what has been said, but I guess what I would add, when you talk about rewards, one of the key issues is that I think we're looking beyond just the fundamentals of payments, and payments not just being the movement of money, but also being the remittance details and the information that goes around that actual money movement. And the importance of that is at least now equal to reliable, on-time money movement. And I think that is where banks are seeing an opportunity to really leverage the data that they have and the relationships that they have with their client base to really deepen those relationships and be able to provide more services that are value-added and be able to move forward with the relationship.
Yeah. Now, broadly speaking, when a bank decides on the payments model to follow, it can either be all things for all people, a big universal bank providing everything itself, or you could be a regional bank, a mid-tier bank, a small bank, and decide to do some of it in-house but outsource to a bigger bank, or outsource to an outsourced service provider specialising in payment services. Do you think that banks are addressing these strategic issues properly? Michelle, I'd like to direct that one to you. Which model to follow? Do everything or outsource bits or all of it?
Or some hybrid model. I mean, somewhere, sometimes the truth can be in the middle. And obviously, there's a lot of talk about it. There are a lot of banks that are looking at the option of outsourcing, but then you have to ask yourself the question, what exactly is it that I'm going to outsource out of my entire payments infrastructure? What we said earlier on, we talked about providing the service to the customers. One of the things that came up was providing them with good remittance information. I think the whole concept of the full financial value chain becomes extremely important in those cases. And I think that no matter what option the bank takes, they should be aware of the fact that they can provide that service to their customers. That being said, I think depending on the size of the bank, depending on its cost structure, depending on where it wants to play and how it wants to play, either outsourcing or in-house or some kind of hybrid model may do the trick.
In your position, running a company like Clear2Pay, do you find that you're gaining quite a bit of influence in banks? So are they coming to you and asking you for advice on how to shape their payments infrastructure?
Oh yes, absolutely. I think there's a lot of people pondering about that question. We obviously have experience with banks all over the world in multiple implementations, and we have had the privilege of working in both models. We have worked and still work for the largest bank in the world that take our infrastructure and run it in-house. Some of those banks will use that infrastructure to do the reverse of outsourcing. They will source in payments from other banks, creating new revenue opportunities for themselves. And last but not least, we have been and still are working with a series of outsourcers that provide those services to the bank. We as a company are also capable to provide those kind of solutions to those organizations that work on behalf of banks. And as you know, in multiple parts of the world there are banking consortia, and those banking consortia sometimes do deliver those payment services based upon our software infrastructure to their customers.
Mark, you're in strategy and marketing. To what extent do you get involved in your department?
I talk a lot to banks about this, and I think one of the key things about this is, I think the easy thing to think about, and Gareth and I have talked about this a lot, is that the outsourcing question is often just talked about giving somebody else the cost of running your infrastructure, and I think a lot of banks were drawn into believing that was the only thing that mattered. So it was a lot of it was based around the volume of payments. But when you actually break it down, it's an awful lot more complex than that. The whole payments process from end to end, and if you include the value chain from from the starting point where a party originates a payment to when it's received and the whole information that goes around it, you have a set of distinct processes, and the bank needs to ask itself which parts of those processes do they want to retain in-house and which do they want to give to somebody else. And that I describe as the personality that they need to have towards their customers. Do they want to be a customer-facing bank where they own the relationship with the customer, or do they want to be the banker's bank where they process payments?
Now, you're talking from a technology solutions provider, of course. Nancy, you can have a more objective view of this. Do you find that banks are actually going to solutions providers to ask them for advice on how to shape their infrastructures?
I would say that banks are. I would say that technology has moved so quickly over the last several years that banks really don't have the experts in-house. And in many cases, they don't know what they can do with technology. And as a result, I think they are willing to turn to vendors. We're even seeing that the old philosophy that the largest financial institutions will build it in-house and not go near a vendor is no longer true. The largest financial institutions really are ones that I think like to do what Mark talked about, with really focusing on where is their strength, what's their strategy, and outsource the things that are non-core for them.
And